as possible. And before we come to the next statement, can I say that Mr. Speaker is very disappointed that the Chancellor of the Exchequer will not be coming to the House in person to update us on the Mansion House speech made last Thursday. The speech included important new policy announcements on a range of issues, including the consolidation of local government pension funds, and I'm sure members would have welcomed the opportunity to question the Chancellor personally on it. Mr. Speaker is very sorry that the Chancellor has not seen fit to come here herself. Statement. Tulip Siddiq.
Thank you, Madam Deputy Speaker, and I apologise on behalf of the Chancellor that she couldn't be here, but if there are any specific questions for the Chancellor, I will make sure that she knows the questions and will make sure she personally writes to members across the House. So, with permission, I will update the House on the Government's work to support the growth of the UK economy. The financial services sector is a jewel in the crown of the UK economy, as I'm sure everyone across the House will agree. It's one of our largest and most successful sectors, employing 1.2 million people, making up 9% of GVA, and the UK is the second largest exporter of financial services in the G7. And on Thursday night at Mansion House, the Chancellor placed the sector at the heart of the Government's growth mission, and building on the economic stability and public investment that the budget provided earlier this year, she set out a plan for investment and reform of the sector. This builds on the rapid work that the Government has already done to support the growth of the sector. 1 week into office, Madam Deputy Speaker, the Government welcomed the biggest changes in the UK's listings regime in over 3 decades. And in our first month, we launched the landmark Pensions Review, and in September, delivering the final stage of the post-crisis capital reforms for banks, working closely with the Bank of England, strengthening our banking system while also protecting lending to the wider economy. The package that the Chancellor set out at Mansion House builds on these steps, beginning with a commitment to develop a comprehensive plan to grow our financial services sector. And in spring next year, the Government will publish the first ever financial services growth and competitiveness strategy, giving the financial services sector the confidence that it needs to invest in the long term by setting out our plans for the sector over the next 10 years. And published alongside our modern industrial strategy, it will be clear-eyed about our strengths, proposing 5 priority growth opportunities: fintech, sustainable finance, asset management and wholesale services, insurance and reinsurance markets and capital markets, co-designed with voices across the financial services sector. And from this base of long-term stability, the Chancellor also laid the foundations for getting even more investment into our country. The Government has already confirmed our plans to capitalise our flagship investment vehicle, the National Wealth Fund, to invest in the industries of the future. And to support investment in our green industries, the Chancellor's speech confirmed the Government's next steps to deliver a world-leading sustainable finance framework. The Chancellor also set out our plans in another key area which I know has generated interest across the House: pension funds. The UK has one of the largest pension markets in the world, but pension capital is often not used enough to drive investment and growth in our economy. Thanks to the excellent work taken forward by my honourable friend, the member for Wickham, the Chancellor announced the interim report of the Pensions Investment Review. This sets out our plans to harness the collective size of our pension funds to create larger pools of capital for investment, supporting pension funds to invest at scale. And to do this, we will deliver a significant consolidation of the defined contribution market and the local government pension scheme in England and Wales, providing better outcomes for savers while supporting investment for growth. Indeed, we could unlock around £80 billion worth for investment in private equity and infrastructure through these actions alone, according to domestic and international comparisons. And alongside economic stability and higher levels of investment, the Chancellor's Mansion House speech put reform at the heart of the Government's growth agenda. The government's approach to regulation is a core part of this. Across our economy, we will upgrade our regulatory regime, including reviewing the guidance we give to the Competition and Markets Authority and other major regulators to underline the importance of growth. And this includes our financial services regulators. Whilst it was right that successive governments made regulatory changes after the global financial crisis to ensure that regulation kept pace with the global economy of the time, it is also important that we learn lessons from the past. So these changes have resulted in a system which sought to eliminate risk-taking, and in some cases they have had unintended consequences which we must now address as a new government. Regulation has costs as well as benefits. It has costs to firms when they're spending large sums on compliance and they're not using that money to innovate and to grow. And it can have cost for consumers, for example, by restricting access to financial advice that could help them plan for the future. So whilst maintaining important consumer protections and upholding international standards of regulation, now is the moment that we feel to rebalance our approach and take forward the next stage of reforms needed to drive growth, competitiveness and investment. To support this aim, the government issued new growth-focused remit letters to the financial service regulators to make clear that the Chancellor and I fully expect them to support the government's admissions on economic growth. The Financial Ombudsman Service plays a vital role for consumers to get redress, and this will not change. But reform is needed to create a surer environment, and we will work closely with the FCA and the FOS to develop a new agreement between the two institutions with clear expectations on how they cooperate, including on historic market practice and mass redress events. And now the government welcomes the call for input, which asks for views on how to improve the rules governing on how the FOS operates. The government's ambitions for reform much wider than regulation. Building on our work to improve the UK's listing regimes, we're unlocking funding for our capital markets and legislating to establish PICEs, an innovative new stock market by 2025 to support companies to scale and grow. We are also supporting innovation in the financial services sector by launching a pilot to deliver a digital gilt instrument using distributed ledger technology, as my written statement sets out today. Insurance markets are pivotal to supporting growth and creating resilience by helping us all manage risk. So the government has launched a consultation on captive insurance, where a new approach could cement the UK's position as a leading financial services centre. This government, as the House will know, prioritises the growth of the mutual sector. So we've launched a call for evidence on the credit union common bond and asking regulators to report on the mutual's landscape to support their growth, and welcoming the establishment of an industry-led mutual and cooperative business council. The Chancellor also published our national payments vision to set out the government's ambition for this vital sector, ensuring that our approach to regulation allows firms to grow and innovate, including decisive action to progress open banking and support, of course, our fantastic fintech businesses. And finally, we are working with tech platforms and telco networks to reduce the scale of fraud originating on their platforms. The Chancellor, the Home Secretary and the Secretary of State for Science, Innovation and Technology have written to leading tech and telecom companies, calling on them to go further and faster with clear action to reduce the level of fraudulent activity that exploits their platforms and networks, and we will be monitoring this closely in the coming months. Madam Deputy Speaker, this is a significant package to support the growth of the financial services sector and to invest in the wider economy. I've heard lots of murmurings from the people opposite while I've been speaking, and I hope this shows how they approve of our overall package. And I look forward to working across the House to deliver these important reforms in our first ever Labour Mansion House speech in 14 years. Thank you.
Shadow Minister Mark Garnier.
Thank you, Madam Deputy Speaker, and can I thank the Minister for advance sight of her statement. Madam Deputy Speaker, can I start by congratulating the Chancellor via her Economic Secretary on her maiden speech to the Mansion House. It has gone down broadly very well, and we are pleased that she recognises the city for what it is. The Minister rightly points out that the UK hosts a competitive and global financial centre. However, changes to regulation must not be burdensome, and they must be worked through properly with the industry. And when and where the government takes steps to enhance the performance of this sector, they can absolutely be guaranteed of our support. And as the Chancellor mentioned in her Mansion House speak, in a generous tribute to her predecessor, much of the regulation reform discussed today was started under a Conservative Chancellor. So today I would also like to put on record recognition for the member for Godalming and Ash for the work he did in this area. But before I turn to the substance of the statement today, inevitably I will be obviously talking about the budget, and it is worth reminding the House that the most pressing parts of the Chancellor's budget that she left out of her Mansion House speech. Mr. Speaker, the Chancellor's speech, in the Chancellor's speech, she mentioned the word growth no less than 41 times, but we have to look at the facts. When the Conservatives left government, we had the fastest growing economy in the G7. Now growth has halved. Her increase in national insurance means that businesses are picking up the tab to pay for Labour's open tab on spending. She will no doubt have read the letters sent to her by 200 hospitality businesses, highlighting job losses across theirs and a wider range of sectors. So despite all her talk on growth, business groups and economists agree Labour's approach to the budget is choking the momentum of our economy. And Britain deserves a government that backs growth, empowers investment and delivers prosperity. And I hope that the Minister today will admit to the British public that while she talks about growth, her party's plan to grow the economy do fall short of an economic growth agenda. But, Madam Deputy Speaker, to the substance of the reform that the Minister has outlined today, we believe the objectives of the Chancellor is attempting to achieve in her Mansion House reforms are broadly the right ones. First of all, it goes without saying the delivery of the reforms the Conservatives started in government can be welcomed, including the focus on growth for which the member of Godalming and Ash legislated for, to ensure financial service markets regulation has a secondary growth duty. But it is to be regretted that the government could not publish the final version of the pension investment or the pension bill to accompany this statement. As I turn to my specific questions, I do want to make it abundantly clear to the Minister and to the House that these reforms must remain focused on delivering the best deal for pension savers. And whilst additional investment is welcome, the pension market should not be treated as a government cash cow for public investment if it loses sight of the paramount objective to deliver a secure return for savers. It is true that unlocking greater investment and delivering greater returns for pension savers can come together. Both can be true at the same time. But as I've said, without the publication of the finer details of this policy, I must push for more detail. An emphasis still must be on pension savers. Whilst it can be that these things come together, security in retirement is what the pension industry is all about. So work to reconcile these two aims was furthered by the member for Godalming and Ash when he announced reforms earlier this year. And these included requiring pension funds to publicly disclose how much they invest in UK business compared with those overseas, and disallowing schemes performing poorly for savers to take on new businesses from employers. So can the Minister confirm that these still remain government policy and nothing she is announcing today changes those strands of policy? So turning to the proposed mega funds, the consolidation of some 86 local authority pension funds into just 8, can the Minister set out a time frame for the merging of these funds? And what is the criteria on which the government has chosen 8? Why not 1? Why not 10? Why not 15? The government notes the local government pension scheme in England and Wales has assets currently split across 86 different administering authorities, with local government officials and councillors managing assets on behalf of each fund. So can the Minister clarify if each of the 86 local government pension funds will have a stake in each of the 8 mega funds, or will it be allocated to just one of the mega funds, therefore possibly distorting the risk profile of that pension fund? And the government states that consolidation into a handful of mega funds would enable the funds to invest more in assets like infrastructure. And can the Minister confirm if the infrastructure the government notes in their press release refers to both public and private infrastructure projects? And on the topic of infrastructure, what is the expected return on government-owned infrastructure projects? Will pensioners ever be mandated to take lower returns to support the government investments objectives? And the pension minister who's in her place, I think, raises some ambiguity about whether mandation will be made on pension fund investment into government projects in a Financial Times article only this morning. Furthermore, will the trustees overseeing these mega funds be restricted by the government as to what they can invest in, or will they be free to choose their own investment and risk profile? The government also states a new independent review process will be established to ensure each of the 86 administering authorities is fit for purpose. So can she give any further detail on this review? Who will be running it? For how long will it be running? And what is considered fit for purpose? And how many of these funds would have to be considered not fit for purpose for the government to reconsider the number of mega funds? To conclude, Madam Deputy Speaker, we support what the government is trying to do with their reforms, many of which are ours, but question remains about the detail of the policy. We will scrutinise the detail of the legislation when published, and I will finish by saying, as I started, that the government is talking about investment and growth, having just delivered a budget that downgrades growth and crowds out business investment. These two things are not compatible, and we urge the government to put forward a workable plan for growth. They must not rely solely on the financial services sector to bail them out. Thank you.
Thank you. I thank the opposition spokesperson for his comments. I think there was some welcome news in there, although I wasn't quite sure. I would just like to remind him that he spoke a lot about the ex-Chancellor, who did a lot of work in this space. The ex-Chancellor said there was much to welcome in the Chancellor's Mansion House speech. Just to remind the House, also, our Shadow Chancellor said that broadly these are good reforms. So I thought I'd remind him about that as well. I just want to remind the opposition spokesperson that we're not interested in sticker plaster politics. We're taking a long-term vision of the economy, which is why we're looking at things like the National Wealth Fund and the industrial strategy to make sure that we grow the economy. I'm going to answer a few of his questions, but if I don't get to all his pension questions, the Minister for Pension is happy to meet for him. I wanted to point out to him that our public services are crumbling, and we inherited a £22 billion fiscal black hole from the previous government, and we had to make difficult choices to fix the foundations of the country and restore desperately needed economic stability to allow businesses to thrive. So he pointed out that hospitality businesses were contacting him. More than half of employers will either see a cut or no change in their national insurance bills. And to support the hospitality industry, we are permanently cutting business rates for retail, hospitality and leisure from 2026, alongside a 40% relief on business rate bills next year for thousands of premises. We are committed to delivering economic growth by boosting investment and rebuilding Britain, which is exactly what our budget did. The interim report of the Pensions Investment Review, which he had lots of questions about, put forward proposals to drive scale and consolidation in the defined contribution workplace market, and the LGPS are still consulting. It will come out in spring next year. The final version will come out in spring next year. But like I said, the Minister for Pensions is happy to speak to him. There is international industry consensus that the scale and consolidation benefits investment and benefits savers, and that these measures could unlock around £80 billion of productive investment. On his questions about taking autonomy away from local authority through these reforms, under the proposals in the consultation, each administrating authority would retain control over the most impactful decisions by setting their investment objectives and strategic asset allocation. The consultation proposes that the implementation of the chosen strategy is delegated to investment experts in the asset pool who are best placed to execute the investment objectives to meet the desired investment outcomes. I hope that reassures him that we won't be taking autonomy away from the authority. In terms of these objectives, when he's talking about the overall package in terms of boosting UK economic growth and benefiting pension scheme members, the objectives are complementary. Driving consolidation, tackling waste in the pension system ensures schemes can achieve the necessary economies of scale and efficiencies to pursue diversified investment strategies. So, I want to reassure him that assets like infrastructure and private equity are seen as part of the balanced portfolio, and they can enhance savers' returns. They will be boosting economic growth, so he doesn't need to worry about that, and we will benefit the communities where pension savers live. As I said, if he has further questions on the pensions from the Minister for Pensions, is happy to speak to him. But I would say to him that the new reforms could unlock around £80 billion of productive investment. And he talked a lot about what the previous government did. They talked a lot about pensions, but they actually never did anything. So we've shown in the first few months of a new Labour government that we mean business, and we've got our action ready to go. So by next spring, he will see the full details in the bill. Thank you.
Chair of the Treasury Select Committee, Dame Meg Hillier.
Thank you, Madam Deputy Speaker. And I should draw the House's attention to the fact that a family member works for Allied Irish Bank and that I am a trustee of a pension fund. I wanted to ask my honourable friend about the remit letter for the Financial Conduct Authority. There is a danger that, just as in Dr. Dolittle, the push me, pull me didn't know which way to go, in that trying to pursue the secondary objective as well as protecting consumers could lose out. So could she set out very clearly how she expects the FCA to make sure that it is maintaining its approach to protecting consumers? And could she perhaps make a further comment, picking up on the comment from the front bench opposite, about whether there will be any move to mandation for pension funds to invest in UK infrastructure?
Minister.
I thank my honourable friend for that question. On the question on pension funds, we're not looking at that right now, but I will let her know when we do take action further on this. In terms of the remit letters that she talks about, we're committed to financial inclusion, and we're committed to making sure that consumers are looked after as well. And that's why I've asked the regulators to have regard to this in their remit letters. And that's why I've made it clear that our top priorities is promote growth and international competitiveness. The laser focus of the remit letters are on growth, and they're not intended to encompass the entire full scope of the government's vision for the sector. But she should be in no doubt that consumer outcomes is top of our agenda, and in every meeting that I have with the regulators, I've made that clear.
Liberal Democrat spokesperson Daisy Cooper.
Thank you, Madam Deputy Speaker. We welcome any reforms that will provide an effective route to growth, but without putting any undue pressure on people's savings. So we look forward to seeing more details from the government. But in the meantime, can I press ministers on their broader goal of getting investment in innovation? Some of my constituents in St Albans are reporting that their SMEs have invested in innovation. They have successfully applied for R&D tax credits, only for HMRC to now be clawing them back. Now, it's right that HMRC tackles errors and fraud, but thanks to Conservative inaction, it is now widely accepted that a number of SMEs are seeing their valid claims being rejected or withdrawn, whilst other SMEs are simply not applying for these tax credits at all. Will the Minister please conduct an urgent review of HMRC's approach to this, with a particular focus on whether this approach is undermining the growth and the innovation of the SME sector?
I thank the Honourable Lady for her comment, and I'll be sure to pass on her comments to the Financial Secretary, to the Treasury, who will look into this. But I am worried to hear what she says about SMEs, and she's absolutely right to say they are the heart and soul of our economy, and we should be looking into this. So I'll make sure that he writes to her, but that also if she needs a further meeting, I'm sure he'll meet with her. Thank you.
Stella Creasy.
Thank you, Madam Deputy Speaker. One of the areas of financial regulation I know members across the House have been long calling for is of buy now, pay later companies. Because of the delay in regulating these companies, a third of people seeking debt advice do so because of buy now, pay later companies. The Woolard report in 2021 identified the urgency, understanding for the FCA, for regulating this industry as soon as possible. So I welcome the government's commitment to regulate them, but I am as bemused as many people are as to why it will take until 2026 for the regulations to take effect and for our constituents to be protected. So can the Minister give me an assurance as to why, when everybody knows this regulation needs to happen, everybody knows what those regulations are, the Financial Conduct Authority have been waiting since 2021 to do it, why are we giving these legal loan sharks 2 Christmases worth of presents to exploit our vulnerable constituents in this cost of living crisis?
I thank my honourable friend for her question, and she has done an enormous amount of work in this area, so I applaud her for all the work she's done, and she was instrumental in the government initially coming in and taking the first steps to regulate the buy now, pay later sector, which I have done so far. There is need for buy now, pay later during a cost of living crisis, and people are going to access their products. But what I've done is bring it under FCA control so far and regulate it to make sure that it's safer and that people don't store up a huge amount of debt that they can't pay. The consultation is open until the 29th of November, and I would urge other people to feed into it so we can get this policy right, because it wasn't done by the previous government. And I will bring forward legislation as quickly as possible, but I did think it was important to bring in the consultation and hear what people have to say, because we do want to regulate it properly and we have to hear what the sector have to say. I do understand that she's being very patient, and I'll ask her to be a bit more patient, but our intention is to make this sector as well regulated as possible under the FCA.
John Glen.
Thank you, Madam Deputy Speaker. I warmly welcome much of what was announced last week, the work on listings, mutuals and the remit refresh. But I would just say to the Honourable Lady and her colleague, the member from Wickham, that there is considerable reticence in the pensions industry to resist many of the drivers of change that were highlighted last week. And what is needed is a complete cultural shift and change in appetite from those who lead the pensions industry. And I would urge her to keep under review the fiscal incentives and the transparency and accountability rules to show that the performance gap for not making some of these changes. But I look very sympathetically at the aspirations that she has set out today, and I wish her well as she moves forward with these critical changes that I think there should be a lot of support across the House.
I thank the Honourable Member for his question, and I know he did a huge amount of work in the financial services sector while he was in position. The civil servants still talk about how amazing he was, much to my dismay sometimes. But just to say, we agree that there needs to be a change in appetite in this place. Transparency is top of the list, as the Minister for Pension just whispered in my ear, and we do thank him for his constructive approach on this review, and we urge him to tell people that he knows in the sector to respond to the consultation and to feed in as well.
Polly Billington.
Thank you, Madam Deputy Speaker. The Minister will know that investment in our energy system is vital to achieve our clean energy superpower mission, creating jobs and cheaper, cleaner, more secure, homegrown energy to power our economy. What is she doing to ensure that financial service regulators support the government's mission while holding up high industry standards?
I thank my honourable friend for her question, and I know this is an area that she takes a keen interest in and has been talking about it for the last 20 or 25 years that I've known her. We agree this is very important. The FCA and the PRA are required to have regards to the UK's net zero emissions target as set out in our Climate Change Act 2008. The Mansion House speech, which you would have seen, sets out the government's next steps to delivering a world-leading sustainable finance framework, and this will be a huge part of our financial services strategy as part of the industrial strategy next spring. So I would urge her to consult and feed in on that as well.
Lisa Smart.
Thank you very much, Madam Deputy Speaker. I speak as a former trustee of a local authority pension fund. And much of the correspondence I received from those pension fund members was not about the returns they were receiving, but about the investments that they were in but couldn't choose to come out of because it was a DB scheme. I appreciate that the review is ongoing, but I wonder if the Minister could confirm that any review they're taking considers the autonomy remaining in place for those local authority pension funds not to invest, whether in companies, countries or sectors, for ESG reasons.
I thank the Honourable Member for her question. The consultation is ongoing, but I'll just repeat by saying each administrating authority will retain control over the impactful decisions by setting out the investment objective and strategic asset allocation. And the Minister for Pension they will have control over their pool's assets, and the Minister for Pension is happy to meet with her if she wants to discuss further. But as she said herself, the consultation is ongoing, so I don't know if she wants to wait till after the consultation.
Florence Eshelemi.
Thank you, Madam Deputy Speaker. I declare an interest as a proud Labour Co-op MP, and it was good to see the Chancellor outline the ambition to grow the co-op and mutual sector. which is really great, and seeing those regulators come forward in terms of the work. But can the Minister outline if there's a time frame for this? Because, as the Minister said, to ensure we see the growth of the UK economy, it means we have a rich, diverse growth in the mutual and co-op sector as well.
I thank my honourable friend for her question, and as she said, she stood on a ticket to be a Labour and Cooperative Member of Parliament, and I know she's done a lot of work in this area as well. Last week, the Chancellor set out multiple new measures to unlock the full potential of the mutual sector, as we outlined in our manifesto. This included publishing a call for evidence on reforming the credit union common bond and asking the PRA and the FCA to report on the current mutual landscape. The timeline for that is by the end of 2025.
Dame Harriet Baldwin.
Thank you, Madam Deputy Speaker, and I also declare my interest as a trustee of the Parliamentary Pension Scheme. There is a lot to welcome in the Chancellor's Mansion House speech, a lot of it taken from the Mansion House and Edinburgh reforms of the previous Chancellor. I particularly welcome the increase in access to financial advice that the Minister said she is taking forward. Can the Minister confirm what I believe was in the Chancellor's speech, was that the end of the senior managers regime in the city? And if that is indeed the case, how she plans to take that forward, and will it require primary legislation?
Thank you. The government will consult on replacing the certification regime and will seek the views of industry and all interested stakeholders in doing so. And we are working closely with the PR and the FCA on this. And if she meant the certification regime, but the senior managers regime, we are keeping under review at the moment, but it wasn't mentioned in the way that she thinks it was, I think.
Gregor Poynton.
Thank you, Madam Deputy Speaker. Before the election, Labour set out our plans to grow the mutual sector and the financing growth report, something I know was welcomed across the sector. In fact, when I visited my local credit union, the Caledonian Credit Union, perhaps you'd declare an interest, because I'm now, after that visit, a member of the Caledonian Credit Union, they welcomed that too. And I welcome the Mutual and Cooperative Business Council being set up. But can the Minister explain to us how this will really drive forward the growth of the sector?
I thank my honourable friend for that question, and as he knows, in the Mansion House speech we set out multiple new measures on unlocking the full potential of the mutual sector, and as he says, we welcome the establishment of an Industry, Mutuals and Cooperative Business Council alongside our delivery of legislation to support the building society sector last month. And what we want to do with these measures is ensure the sector can grow, and we want to support inclusive growth across the UK. But in the last few months that I've held this position, the main complaint that the mutual and cooperative sector seem to have is that it's very difficult to operate within the current regulatory framework, but it's not set up to support mutuals and co-ops in the same way that it supports other businesses. So that's something I'm looking at, but I'm very happy to continue that conversation. But it is about looking at the regulatory framework and making sure it's fit for purpose for doubling the mutual sector, which was our commitment in our manifesto.
Rupert Lowe.
Thank you, Madam Deputy Speaker. In her Mansion House speech, the Chancellor announced that we would be changing the emphasis of regulation from risk to growth. The FCA and PRA have effectively regulated the London market into terminal decline, embedding Stonewall philosophy and DEI into financial regulation, starting with the Financial Services Markets Act of 2000. This was followed by MiFID I and MiFID II, which imported EU regulation into the London market, prioritising a European bank lending model over our equity capital market tradition. Given that regulators cannot regulate for growth, the only solution is to disband the FCA and PRA and return to the light touch regulation under the Bank of England, which secured London's position as a vibrant capital market until 2000. Could the Minister explain with clarity the government's strategy of regulating for growth, which appears to me to be an oxymoron?
I thank the honourable member for his question. I would say that our regulators do a very good job, but we will be holding them to account, but they do a very good job, and we are very lucky to have them. When the Chancellor talked about risk-taking, what she was saying is that regulatory changes post-financial crisis created a system which sought to eliminate risk that has gone too far and led to unintended consequences. For example, the certification regime has helped to improve standards and accountability, but some elements have become overly costly and administratively burdensome. So that's what we're looking at. But I wouldn't say getting rid of the regulators is the way to grow the economy, but I do think holding them to account and looking at how we increase risk-taking in our system is the way that this government will be approaching things.
Kirsten Sullivan.
Katrina Murray. Sorry, thank you, Madam Deputy Speaker. As a long-term member of the NHS Scotland Credit Union, I know the importance of having a community and workplace-based savings and lending provision, which is much more accessible for people on low incomes than buy now, pay later. Yet it has become much more challenging for the sector to operate, which is wider than the common bond. Can I ask the Minister what she is doing to ensure that the credit unions are not just able to compete with the wider financial sector, but are able to thrive in these circumstances?
I thank my honourable friend for her question, and I absolutely share her enthusiasm for credit unions, especially the ones in my constituency, which I visited several times and know the good work that they do. We've made it clear that we have a strong support for the mutual sector. We recognise the value that credit unions bring to their members in local communities, including in her constituency. The Chancellor launched a call for evidence on reforming the credit union common bond last week at the Mansion House speech. But the reason we did it is we want to understand whether reform is needed in this space to help credit unions grow substantially. And what we will do once we've had the call for evidence is consider how much of that reform we can take forward as a Labour government.
Mike Wood.
Madam Deputy Speaker. The Pensions Minister will be all too aware of the ongoing problems facing members of the West Midlands Pension Fund, one of the country's largest public sector pension funds. Why does the Economic Secretary think that the Chancellor's 8 mega funds will provide a better service to the people whose pensions that they invest than we have seen from West Midlands Pension Fund?
I thank the honourable member for his question, but we will be building on the success of these pools that already exist. If he's not satisfied with my answer, the Minister for Pension is happy to meet with him.
Gareth Snell.
Thank you very much, Madam Deputy Speaker. Much like my friend from Vauxhall and Camberwell Green, I am also a proud member of the Cooperative Party, so it is music to my ears to see so much cooperative and mutual content in the Mansion House speech. In particular, with the new Cooperative and Mutual Business Council. Could the Minister say a little bit more about how she anticipates ministers will interact with the new Business Council, and will her Treasury colleagues consider new financial instruments to help cooperatives and mutual meet the growth that they know is available to them?
I thank my honourable friend for that question, and I know he's an active member of the Cooperative and Mutuals movement. So the Government has already taken the first step with 2 SIs which were laid on the 14th of October. It's committed to progressing the remaining changes to the Building Societies Act, following the royal assent of the Building Societies Act of the amendment. I will be looking at further SIs to try and further the work in here, but I do want to support the industry-led council, and I welcome the opportunity to work with it and discuss and test policy proposals with representatives and experts from across the sector. And I know this view is shared across the Treasury, including by the Chancellor herself, who asked about it this morning in our ministerial meeting.
Dr. Andrew Murison.
Deputy Speaker, small pension fund investing is boring because it's risk averse, safe for beneficiaries, and principally concentrated in this country. Whilst investment, if it happens, in UK startups and tech through venture capital and other vehicles is to be warmly welcomed, nevertheless, there's a very real risk that funds will simply be invested overseas, and the Canada experience suggests that may very well be the case. What assessment has the Treasury made of the extent to which the small pension funds that she envisaged being amalgamated will simply have their capital, their investments lodged overseas in other countries' tech and start-up companies, and deprive our own of the same?
I thank my honourable member for his question. We are looking at a diverse portfolio of assets, and the pensions funds that he mentions, they've already pooled and are already investing in the UK.
Tom Hayes.
Thank you, Madam Deputy Speaker. Bournemouth is a wonderful place to represent for lots of reasons, and one very good reason is the presence of a large finance sector. We have JP Morgan and Nationwide Building Society, who I was pleased to visit recently and hear about their aspirations. Over the last 14 years, we have seen that sector on the South Coast starved. Would the Minister inform the House about some of the steps that she and this government will take to support coastal finance hubs? And moreover, recognising that her diary will be quite booked up, can I invite her to come to Bournemouth and meet with representatives of those firms? And if she will, I'm happy to buy her an ice cream.
My honourable friend will know that I can never resist an ice cream, so I think I probably will be visiting after all. But just to say that places like JP Morgan, which employ 4,000 people in the financial services industry, is vital to us. One of the things that the Chancellor's speech built on is the significant steps that the government's already taken to enhance the competitiveness of our financial services sector. And we want to look at the biggest changes to the UK's listings regime in over 3 decades. And my honourable friend will be familiar with this. We want to deliver the final stages of the post-crisis capital reforms to banks. So our financial services growth and competitiveness strategy, which I hope he will he will also write to us on, we want to give the industry certainty and the confidence to invest, which I think is the main thing our financial services sector wants right now. And I think people in Bournemouth will probably agree with that. And I look forward to that ice cream.
Jim Shannon.
Thank you, Madam Deputy Speaker. Can I thank the Minister for her statement? We must welcome the news that London edges closer to New York as a financial hub. However, the Minister is aware that growth only happens if we attract investment. The decision to pull pension funds into larger investment vehicles is, I believe, a very bold one, and yet the Chancellor investment must ensure that there are guarantees in place so that the mega pool of pensions does not go down the drain, and that there are guardrails in place to safeguard the nation's pension pots.
I thank the honourable member for his question, and I'd like to reassure him that boosting return for savers is at the very heart of this agenda, and that's why we're pursuing this pensions review. We want these reforms to increase security and boost people's pension pots. We want to unlock about £80 billion of productive investment. So what we're looking at, the government's reforms are already in the pensions schemes bill, and they could boost a typical defined contribution saver's lifetime pension pot by £11,000. So I don't want him to worry, because we do have our eye on how to protect pensioners and how to protect savers.
Steve Yen.
Deputy Speaker, in my constituency of Mansfield, our member-owned mutual organisation, Mansfield Building Society, provides essential banking services. They are significant local employers and invest in projects to support my community. What is the Minister doing to unlock the full potential of this sector and organisations like Mansfield Building Society?
I thank my honourable friend for that question. I've already mentioned the first step with the 2 SIs which were laid on 14th October, which is trying to modernise the Building Societies Act, and I'm happy to send him further information on that. But the main thing we will do is carefully consider the findings of the Law Commission reviews to understand whether reform of the legislation is needed to ensure that these businesses are better supported and grow more in the future. The response from the calls for evidence will be carefully considered by myself and others, and any potential reform will of course require formal consultation. But I want to make sure that he knows that top of our agenda is trying to unlock the full potential after not unlocking the full potential for the last 14 years of this important sector.
David Pinto-Dushinsky.
Thank you, Madam Deputy Speaker, and I want to thank my honourable friend for sharing her statement and welcome the support it's gathered from across the House. However, I did note that the member opposite mentioned concern about pensions, and members will of course remember it was the party opposite that caused chaos in the markets with their mini-budget, putting our pensions all at risk. What will the government do to ensure financial stability and make sure there can be no repeat of the chaos they caused?
I thank my honourable friend. I don't know what he said. I thank my honourable friend for his question, and I know he knows this area well, having worked in the Treasury in a former life as well. What we will make sure, absolutely, to avoid the mistakes of a certain Liz Truss, is that we will work very closely with the TPR and the FCA to deliver all our reforms and make sure that we don't make any decisions that shake the stability of the economy, because we want to have a stable financial services sector and a stable economy to encourage investment and ultimately to deliver on our growth mission.
Amanda Martin.
Thank you, Madam Deputy Speaker. Portsmouth people welcome the National Wealth Fund, the Industrial Strategy and the Chancellor's Mansion House speech, and the stability that offers our country and its much-needed economic growth. Does the Minister agree with me, though, that consumer protection is a vital issue that we must ensure does not get lost in our growth strategy? And can the Minister say what the Government is doing on this agenda to ensure this?
I thank my honourable friend for that question, and really consumer protection is at the heart of anything we do in financial services. As well as being a minister, I'm also a constituency MP, and I have to say that every time I have one of my surgeries, I hear about people who have either been a victim of fraud, who have taken out a buy now, pay later product without realising the consequences. And what we want to do is give enhanced consumer protections to people through the Financial Ombudsman Service, but we are very aware that needs to be reformed, which is why the Chancellor mentioned it over in her speech, and we plan to introduce legislation as soon as possible on it, because after years of uncertainty, we want to deliver better protection for millions of consumers. I'm also making progress on financial inclusion at the moment, and I can send her more information if she wants. We're setting up a financial inclusion committee. We're meeting next week, and I'm happy to